Hey guys, yep, it's not what you make, it's what you keep. Or that webinar on the last day of this month, 31st of July. If you're new and you'd like to learn more about defense and also making money on the short side. Anyway, it's Bitcoin 2 hours, 2 hourly. If you want to find out more about that side of things, the free webinar, go to the website in the notes below. So what have we got here? I called into question any opportunity of the inverted head and shoulders on this red level neckline that many bull orientated reversal trader would have been predisposed towards. And one of the key reasons is we've been selling off hard and we've been grinding on the up legs. Selling off hard, grinding up in rising wedge on the up legs, marginally higher highs. We sold off more impulsively again here with this look one way, go the other way candle. We just ran that funnel, then we had that bump up against the key level of resistance there with that rising line under that. That's kind of like a rising wedge with a flat top and an angled bottom. Kind of an ascending triangle more than anything else. We spilled again deeper into the wedge, and then we had a look one way, go the other way candle. I call these, they're very critical reversal candles. And that was on the funnel here of the legacy setup to the downside over here. So you supported on it, you went really low vol, you had a final spill go for the spill out the bottom of the wedge, and then you turned around and you get your backside kicked. But the key element that was a cautionary, and I gave this all to my premium guys, is that we've had many falling wedges where you've had a pump out the wedge and then you've ended up trading lower down after the push. There's no follow through. If you have a look at this look one way, go the other way candle, it's moderate volume relative to even that, and certainly these periods. So it's a kick out of a key level of significance. Everyone getting really excited about Bart patterns and rectangles and all of this. It's called trading to the level. It's not manipulation. It's where people are trading to round numbers. And incidentally, if there are ever any derivatives, they will be in and around round numbers. So key levels of significance where the market price has settled before, round numbers, pattern, proven zones. So we had the funnel of support here. You could see it was resistance here. Once you push through it, it became support. All those principles hold. When you break it impulsively. When you rally, you bump into it and you can't clear it. You then spill to the next key zone. These are all key levels of significance. Some of them will be round numbers. Some of them will be other areas where you've shown significance before. And as you can see, first sign of support here, very low vol, begets a move, a dip, and then a pump. And then again, very, very low vol and lack of zeal for continuation upside. Again, very much like this key candle over here, an attempt to go melt up out the top of the rising wedge, which is the structure you were in after this rally, spanked, pushed through and broken down. You could have got short there again. Now, while this is looking like a hammer for now on the H2, my suspicion is that in time we'll trade through this low. So already, and these are the key levels I highlighted to just further bury the inverted head and shoulders argument. That was your left shoulder low. You've now traded through that. Further to that, I would say that actually at a candle body level, you never really traded lower than here, right up top there at the 6288 level, which you smashed through highly impulsively and have been at a body level below since. If you look at these two apparent inverted comma shoulders, and you've run the extremists already, and I still suspect, despite this hammering and getting a bit of a rally and a bit of a return move to this wedge, that there will be scope for further downside here. So my told premium a while ago when we were modeling for this that, you know, we would look for this yellow line and this blue line, a possible settlement level for a low before you get some degree of action. We can be inaccurate. This could be it right here. It's almost good enough. My suspicion is that you're going to get a flat bottomed low. That is not as flat bottomed as I might expect, hence why I think it might still have a point of trade between these lines, or even sweeter, aka flatter over here. Sweeter for people that are bearish inclination in a bearish market, and that would maybe get a setup for continuation to the downside. So how would that look going up the time frames instead of down? You would essentially have sold off, had a low, had a high, and then looking for your low 2 with a follow-up rally that will potentially occur. Now, it might be occurring now, but I still feel there's scope that we'll trade a little lower than that low on the wedge and invalidate that funnel level, and that would give you a lower low 2. But let's say, for example, that is the low 2, then you get a grinding rally that will not be very, very bullish. How would I be inaccurate and wrong, which is always possible? And I continue to emphasize this. This is not a prediction, and this is not a yay, you won, and boo, you lost on the prediction game. You will be losing ad hoc and winning ad hoc often enough. It's the scenarios and it's the biases and the information you can distill from this in terms of how you bias. So since this look one way, go the other way, I have been double affirmative on the short side and have positions and have held, although I lightened that key moments over here, and again after the rejection candle. But then after seeing that, there wasn't too much of scariness, and this candle here really goes a long way to negating this dip and rally. The fact that it couldn't follow through, the fact that it attempted and the late bulls got up to this point and then properly spanked right back down is very, very bearish. Remember, this candle hasn't finished forming. It is green now. It can be red, for all you know, it could be red and running through here for all intent and purpose at the same time. That said, it could also be pumping extremely impulsively. But I would argue the area under this neckline that you have on your left shoulder is already substantially bigger. Even if you went very promptly up to the red line, which we've called working inverted commas neckline, you would have a very deep right shoulder. That doesn't mean you can't have inverted heads and shoulders and normal heads and shoulders where the right shoulder is more dominant. And they still come back and they pattern it, just less likely. Typically, you should see the momentum swinging through the pattern to less aggressive selling and more aggressive buying. And while you had aggressive moments of buying, there wasn't many periods of follow through. Then you'd have a pump and a zig and a zag and a zig and a zag. And actually, the overall gradient from this low here is roughly replicated by the midpoint of the rising wedge that I've drawn. Now, if you look at that gradient on the down leg so far, it is steeper. We're still seeing steeper sell-offs. That's like an absence of bid, complete overrun bulls. So, you know, be careful out there if you're on the long side or if you're an investor holder. There were some other observations that we made on the shorter time frames. Ref the OBV, you could see that the OBV had ceased to go up. Here there was a channel, and it wasn't a great strength. It was a weak channel compared to what had gone before it. You were right up here. This was a weak grinding channel from these lows. And then around about here, let's make that a little bit bigger and give the guys a proper look, shall we? Let's get that pointer there. So if we have a look at that now, the reason I do OBV, some people say, oh, but aren't you supposed to be an indicator hater? Yeah, in terms of formulas based on price behavior, you could categorize me as that. I see people that utilize them as stuck in a lagging mindset. What actually you've got here is you've got a channel that then failed to make new highs right from here, you know, very shortly after this period, and you've got marginally higher highs in the price, and you actually got a flat top in the OBV and grinding ascending wedge, and you started to give it up on the volume and sell off from here, which it was also the key point there. So, you know, you can see that this isn't any net accumulation occurring, and in fact you're dipping down each time and revisiting. So once again, this is not a good place. We're not far away. This little price action is more prone to being, if you do TA on volume-based indicators, which I would say is permissible, it's more prone to be continuation through this. So I'm looking for the fact that you did respect this funnel and rally off it. I'm looking for that subsequently to illustrate itself as temporary support, much like the lows of this bull flag was support here, and this previous funnel was resistance once you broke it and support when you were above it. In the same way, price behavior continues to respect key levels of significance, and these are the foundations of what people are calling Bart patterns and rectangles and all of this. Patterns and recognizing key horizontal levels of support. People understand price, and that's why there will be zones, and they are usually places where they've been reflected before. That low on the shoulder runs through a lot over here and actually is the midpoint and axis of that squeezing low point volatility. You can call all of these coincidences if you like. That low over there trims the end of the capitulation and the beginning of the pump back up, and just a churning bottom, and does it again there as well, almost like a neckline to whatever microfractals are within that. So hence why I'm saying I think we could still see a level down here that will test the 6,000 potentially, and that'll maybe cause another attack of the bulls that can get some form of a rally going before we wind up and properly let go of 6,000 to the downside on a more sustained basis. That said, I am not a super bear, because the pattern is making moderate progress and needs to have a proper sense of capitulation before it starts to run out of time for its target. And I don't place a high probability on the target just because of the fact of how much of a correction we've already had prior and how big a pattern this is relatively late in the bear trend. So it's kind of like the gold chart. Go check that video I did on the gold chart, where you never actually make that target, but you're continuing to respect the bearishness, and you just don't get to become a bull, and you churn and churn around, and a lot of time gets chewed up with a bit of buying periods, with a bit of selling periods, and a bit of chop. And you can, this could be one of those kind of patterns. But it could also be one that performs, at least to the second interim, which I've mentioned a few times now, is just through the 4,000 mark, and that would require an increase in volatility. But this overall entire gradient down is quite relaxed. Our little push for our third high and our third low, and even this is quite relaxed. This eventually can lead to a kind of bottoming out and some lows and then hammering out, and then you could actually start getting some chop, and you could even start getting some clear-cut bullish buying again. So this is, I'm not a perma bear either. This overall gradient of descent accelerated a bit there. It certainly had a proper triggering event there and a rejection after its flag there, but we haven't seen enough of that for bears to feel that so uncomfortable either. So it's kind of like the bear bias remains, but the bear bias remains without over exuberant bear inclination. I'm not using huge size. I'm taking quick little bits. I'm not taking anything for granted to the bearish side. It's just giving me my default bias for now until such time as it's disproven. If we get a low one, a high one, and then a low two here, and then some further squeezing, we go super low vol and we're a little bit flat bottomed, I might scale up in size and look towards milking any potential capitulation. But if we don't get the right structure, you could actually get a first setup in a new trend, and you could pop and invalidate this setup. And I'll be talking about green shoots and all sorts of other environments. So it's certainly not ruled out, and all options remain. But the usefulness of the clip, for those that say you're keeping it too open in terms of all options remain, the usefulness of the clip is for the shorter term and time frames. Your bias should remain bearish. So if I go to the 45-minute and you're having a look at this, you know, you're going from falling wedge, very short little push up, into a rising wedge structure, which will potentially see, although we could support again here, could potentially see us selling off through and taking out that funnel level. We'll have to see. We'll have to see. This is quite a small structure. We could get something bigger that is a larger rising wedge, and it actually rolls into a deeper structure for a while here. It broadens out and then starts grinding up from here without running the funnel. But I have a suspicion that a number of times on Bitcoin we have squeezed, had our pop, and then ended up trading lower than the low of the wedge. Is it still that season? let's ask the question. Let's see. We keep believing it until it tells us otherwise. And that's my take for now. Okay, that's the BTC update. Hope that's useful for you. Bit of use of OBV in there as well. And a small amount of observation of the volume, a little bit of defensive volume coming in here. So there is an element of floor. Who knows, this could be defended. We can see how committed the bulls are to keeping BTC in and above that area. One other observation that does come out, not that one, let's go back. One other observation that does come out was, I called that DigiByte inverted, and look at that, it's come down. It's spilling. I haven't checked that chart yet. We were watching it. One other observation, he says, for the third time, coin market cap, that's the browser I'm looking at, is the Bitcoin is just hanging tough on being above 100 billion market cap, and a few people are commenting about that being a critical level for the futures. If we're remaining on futures, and I haven't got the facts on that. It's just coming out of the community, so go check it out for yourself. But it might be, part of a sort of, as I've jokingly referred to, a sort of Dunkirk defense line that might actually do the defense and hold, or could hold for a while and then capitulate. We don't know. We'll have to watch. So is this psychological, that 100 billion? And it seems when Bitcoin is at 100 billion, the total market cap, certainly on coin market caps, in and around just under 250. So very, very interesting there. Okay, gents, hope that was useful to you. And that's your Bitcoin update. Suspicion is a little bit more softness to come. A little bit more softness to come, and potential funnel run here, and a new low, and that the bias to bearishness following that rejection, which was repeated again in a similar low volatility environment. This is price behavior. This is letting go of levels and skipping and falling to the next level. We don't all have to quite fail. It's very, very, if I can give my little 5-point motivational head framing, it's very, very disempowering for your technical trading. Give up being a technical trading if you're resorting to, oh damn, it's a waste of time, it's all manipulation. By the time you're in that state of mind, you're given up. There's actually a lot of clues to price levels that are being respected. You can see the support in that funnel, how well it held, how it broke really impulsively, how it failed to come back and clear the funnel again up top there. It's all there if you've drawn your levels. So all of these things, if you get your volume by price out, which we use a lot and I teach a lot of, and I do a lot more in my premium area, you will see where at certain price levels defense has been a lot higher. Occasionally I make reference to it in these vids, and you'll be able to understand where the key levels are. And also, if you have pattern analysis, and you are trading squeezes, that is where you get the risk reward and the financial mathematics, and that's the power. Pop over if it's right. It isn't right for everyone. There's a free webinar. It's the 31st of July. And as I say, it's not what you make, it's what you keep. We'll talk more about that. And you can become a price behavior futurist, but it is hard work. You have to develop a skill. You have to learn a methodology, and generally it will make trading easier. It doesn't make it easy. You will be biased generally on the right side of trends more often than you were before. And you'll have that feeling that it's just lost some of that difficulty where you just felt the market hated you all the time. It doesn't mean every trade is a winner. So no space for fantasies in that analysis. We lose and we are inaccurate regularly with managed losses. Okay, speak to you all soon. Enjoy your weekend and the final rounding up of the World Cup festivities as well if you've got skin in that game. Bye for now.